Gordon Johnson just said that Tesla stock is going down to $20 per share, losing 90% of its market cap. Let's see if Gordon has any new tricks that he's going to pull up from his sleeves.
They cut prices in China roughly 10% today, 9%. So what does that tell you? So Tesla has effectively gotten to a level of roughly 1.3 million of annual car sales. Yet they're now cutting prices in China, despite the fact they're intentionally running that facility in Shanghai below 100% capacity, and they have 2 facilities in Texas and Berlin at just 10% capacity. That tells you that at 1.3 million cars, demand is a problem. China is their biggest and only profitable market. So think about this, right? Tesla's about 15% penetration of the luxury market. You've really never seen a car maker get above that. BMW is roughly the same, yet their sales have flatlined. Yet BMW is valued at $45 billion. So if Tesla had a similar valuation, which, by the way, getting to 1.3 million cars is great from Tesla's perspective, but they should be valued like BMW in our view, not at $600 billion. If they're valued like BMW, you're talking about a $15 per share stock. You're talking about a roughly 90% haircut. These price cuts show you that they're having issues with demand. And I want to talk about their margins, but I just wanted to highlight that.
I have a feeling that this one, Gordon is about to out-Gordon himself. Giga Berlin and Giga Texas are running at 10% capacity because we are scaling those factories up. They just started and the production is ramping and increasing. Now this is not a Stephen Mark Ryan video, so I will not point out an obvious fact that it takes 9 months to make a baby. And you know what else takes 9 months or longer to ramp up and scale? A gigafactory. The gigafactories are being scaled as fast as possible, and they will get to their actual capacity of making hundreds of thousands of vehicles per year. Gordon also said that China for Tesla is the only profitable market. So it would be reasonable to think that the cars that Tesla makes and sells in China would be priced at a higher price than those, for example, in the US. So let's check this. So right now, Model 3 in China is going to be sold for 279,000 RMB. We quickly convert that to USD and we get $38,500. This number is important, remember it, and check this out. This is that same Model 3, except you can order this in the US for the price of $46,990. That is what? About a 20% increase in price? And keep in mind, the prices from the beginning of this year for the Chinese market generally overall is still a net increase when we compare all of the models. This has been documented and broken down quite well by Dylan. You may pause the video if you would like to check all of the price increases. And as you can see right here, this is the net increase since the beginning of 2022. This factors in the price cut that we just had just now. And then of course, please show me a BMW that can drive from downtown San Francisco to downtown LA without any takeovers, unless the car tells you to take over, which in this video, there was one system abort warning. So basically the car telling, hey, look, you have to take over. And then there was one software charging. Show me a BMW that can do that. Show me another car company that can do this. Tesla is more of a technology company, so that 5x of, the PE ratio of 5 is not applicable to Tesla because of that. Oh, and Gordon said that Tesla cannot sell more cars than BMW because no luxury car maker penetrated the market more than like something like 15% of market share. Okay, so these are sales in Germany, not just battery electric vehicles. This includes all of any kind of vehicles. As we can see, in the month of September, Tesla Model Y outsold Volkswagen Golf. Tesla Model Y is a lot more than twice as expensive than the Volkswagen Golf. So just because it has not happened before doesn't mean it will not happen. We see data here indicating to us clearly that people are buying Tesla vehicles at rates that it's just completely unprecedented when we compare it to any other automaker. So we cannot compare this to any other automaker. We can't reason using analogy.
These price cuts show you that they're having issues with demand. And I want to talk about their margins, but I just wanted to highlight that.
Demand issues yet again. Tesla sells every single car that it makes. There is the demand issue. I just don't see it.
Produced more cars than they sold in Q3. They produced more cars than they sold in Q2, 2 consecutive quarters. The last time they produced more cars than they sold was in 2017. If you're producing more cars than you sold, then demand is not strong. That means demand is weak. Their book-to-bill is below 1, which means they're delivering more cars than they're selling, looking forward. And, you know, the facts are the facts. And this is all happening with them running their Texas and Berlin plants at 10% capacity. I mean, this isn't rocket science. They're only running 2 plants at 10% capacity, yet they're having to cut prices and they're producing more cars than they sold. So when Elon Musk says he's going to go full tilt and produce as many cars as he can, that should scare the bull. That is a bad thing, not a good thing. And again, I want to talk about the margins. Hopefully we have time.
Oh, I love talking about the facts. So he says that in 2017, that was the last time when Tesla sold more cars than they produced. And of course, if that was the last time when Tesla was doing the right thing, of course, stock would have tanked. Tesla would have gone bankrupt. Also, I would just like to point out the absolute obvious that this is not rocket science, but Elon is smart enough to do even that. So saying this is not rocket science is just saying, hey, look, this is easy for Elon to take care of.
And say, right now, when we're seeing Tesla, I'm hearing people saying fair value is 300 and higher. It's at 204. Where do you think it should be? Just quick.
Yeah, I think Tesla's probably a $20 to $25 stock. And it's very simple. The auto industry trades at 5 times earnings. Right now, Tesla's trading at roughly 75 times earnings.
And Gordon has 5-star rating on tipranks.com. 5 empty stars, I should clarify. As an all-in Tesla stock investor in my stock portfolio, I actually pay attention to Gordon Johnson, as crazy as that sounds. You see, I don't like losing money. And what I want to do is to have every single talking point of Tesla stock bears and see them first before anyone else. And if there truly is something there, I mean, Gordon is probably going to be the first one to find out whatever is going on with Tesla stock is something indeed is happening. So, it's tempting to make fun of Gordon, and his track record is absolutely horrible. But I do have to say, I do pay very close attention to Tesla bears for that reason. Even, let's say, 99% of his arguments make 0 sense, but that 1% eventually perhaps could make sense. And he might be one of the first ones to come up with whatever argument for the bearish side of Tesla stock. And I want to be the first one to know it. So even though admittedly, it's very difficult to watch Gordon in a serious way when he talks about Tesla stock, that is something that I found myself enjoying also because it's just so entertaining. But us Tesla stock bulls, we have to have a very strong argument against every single talking point of Gordon, which we do. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postius, and I will see you in the next video. Thank you so much for watching.